We shift our focus now over to the grain markets. This week joining us is Barchart Senior Analyst Darin Newsom. Here's our conversation from Wednesday afternoon. Yeah, as you note, there is a chance for rain coming up here. I guess as you look at the corn and soybean markets in particular, what kind of storylines you see developing there? I know you're always tracking the demand situation, see if we might be having a bullish story coming down the line. Your thoughts?
Yeah, to me, we're seeing we've still got a relatively bearish picture painted for both corn and soybeans, at least short term. Again, basis has been weakening. We've been seeing carry starting to slowly build in the nearby future spread, particularly in soybeans, where it's relatively flat in corn. And here's where we really see an interesting divergence is, okay, so the corn spreads are a bit more neutral. They're just not really doing much of anything. We can look at the Dec, March, May, and so on. And in the soybeans, it's all front loaded. We're seeing where the Nov Jan has been building some carry, whereas the Jan March is still bullish. And so what this tells me is we know the merchandisers know there's going to be some soybeans sold at harvest, but they also know production is going to be reduced this year, not only from the lower acres that we've known since last February, but because this late August weather did take a toll on the crop, and so they're still registering their concern with by holding that Jan March spread. It's still in bullish territory now. As we go further out into the March, May, July, we're going to be dealing with the next Brazilian crop. So it seems like there's a very small window of opportunity in here. If we're going to see, say, the basis market, cash market, and soybeans firm, it's going to have to be after this immediate harvest glut comes in, by the time that initial round is sold, and then see what happens over the early part of winter.
Well, Darin, to start this week, I had the chance to be on the panhandle of the state and Scottsbluff in particular, and one of our regular Market Journal viewers was asking me who's coming up this week. Told him your name. He said, good. Ask him a wheat question. What's the story happening there? I'll just toss his direct question to you. Your thoughts on the wheat market?
Well, I know the gentleman's probably talking about hard red winter. There just isn't much going on there. All of the focus right now is on soft red winter wheat. It's incredibly bearish fundamentally. Hard red winter from Kansas City is actually fundamentally bullish. It just can't seem to find any buyers at this point. But if we focus our attention on the Chicago market, this week saw the CME's variable storage rates go into effect, the higher maximum rate. This was due to the incredibly strong carry through the month of August in the September spread. So now we've got a higher storage rate. This is causing a bit of uncertainty in the markets, leading to some fund short covering. The commercials are kind of repositioning themselves as all. The basis is still incredibly weak, 20 to 30 cents weaker than it normally is this time of year in soft red winter. This is also weighing on hard red winter and hard red spring wheat. So again, it's just hard to build a bullish story when you've got this bearish fundamental situation going on in Chicago. We could see it start to erode away over time. That's what it's going to take. It's just going to take some time. And right now, there's just no one interested in owning wheat, any of the three categories long term.
All right, appreciate your insight on that topic. Seems like you and I have the ability to time this out pretty well. It's like Groundhog Day around here as I toss questions to you about the Fed. It seems like we talk about that a lot on this program with you, Darin. And they came out as you and I had this conversation on Wednesday with their latest announcement saying they're not going to hike things at the moment, but they do a pretty good job of letting you know what might be to come. And they predicted the chairman might be said that they might do that again, have another hike, I should say, here in 2023. Any indication of what else might happen, Darin?
Yeah, it was interesting, that they did basically what's been thought that they were going to do. When I say they, I mean the Fed. And one thing I've really appreciated about this particular round of the Fed is that they have front run their announcements to limit the type of chaos that we grew accustomed to here a few years back, where we never really knew what the next statement was going to be. So, back in June, Chairman Powell said to expect a couple more rate hikes this year. We saw one in July. We didn't get one in August, didn't get one in September. So now we're down to October-November meeting and the mid-December meeting. What was interesting about the conclusion of the September meeting is that there was also language hinting at possible continued rate hikes into early 2024, rather than the much awaited rate cuts that so many folks have been talking about. So we'll see how that plays out longer term in some of the financial markets.
All right, Darin, I want to get your thought on the livestock complex. In particular, began this week. Not a lot of support in the cattle complex. Did we see a rebound as you and I had this conversation?
The cattle are fascinating. Both cattle markets are fascinating. Is that they should be going down. Everything about them says that they're overbought, they're overweight, they're top heavy, and all of this and all of that. but yet they might spend 2-3 days going down, and then they find the buyers again. Now, at the end of this week, there's the cattle on feed report, so it'll be interesting to see what they say there. Again, it's not a game changer because this will be as of September 1. But the big picture is, the cattle just continue to find buyers. I don't know who's buying up at these levels. We're still at or near all-time highs. Fundamentally, we've been seeing commercial traders putting pressure on these markets through the spreads. Basis has been weak a few times. Now we'll see how the cash market develops. If we see the buyers, if we see packers paying up for cash again, while boxed beef market's coming down, we're going to be looking at a very interesting situation coming out of this week and into next.
On the lean hog side of things, that's been a challenging market to say the least over the past several months at this point. You describe it as wild. Your take?
Yeah, the easiest way to predict what's going to go on in the live lean hog market is to put a blindfold on and start throwing darts. Spin yourself around, throw some darts, see where they land. There's just really no predicting this market from one day to the next. And that's just the nature of the beast. I mean, it goes back to the old pork belly days and live hog days and these sorts of things. So, I mean, it really hasn't changed itself. What we do know is that there has been some support in the cash market. There has been some support coming from the commercial side. That's where you usually want to see the buying start to come from. It's just been so inconsistent here over the last number of weeks.